Hello, welcome to Forex School Uganda. I am Godfrey. I want us to look at the Canadian dollar Japanese yen currency pair. I want us to do a top-down analysis. This trade is running. I've actually entered a position already. I want to do a quick top-down analysis so you can see the reason for my entry, and still price is around the entry area. See if you could also take advantage of it. Now, when we look at this monthly time frame, we see that price broke above this resistance area as it was moving impulsively on its way to the upside, and currently it is in the corrective phase to the downside. Price does not move in one direction, it moves in a series of impulses and corrections if it is trending, but otherwise sometimes it is ranging. But this time around it is trending to the upside. We can see that it was overextended to the upside and it's now correcting some of the moves to the upside to potentially fill some gaps that were left behind as price was moving impulsively to the upside. So that's the monthly perspective. It's currently in the corrective phase of the market after the impulsive move to the upside, and so we could see more bearish moves in the coming days. Now, I want us to drop down to the weekly time frame to see what perspective it gives us of the market. So this is the weekly time frame. We've seen the higher time frame, the monthly time frame, as bearish. Now we are on the weekly time frame. Now, on this weekly time frame, you can see that price was making a series of higher highs and higher lows. This is a high that is higher than this previous high right here. Then price dropped to create a low, but this low is higher than the previous low, and so this is a higher low. Then it created a new higher high, came retracing to form a new high that is a new low that is higher than previous low, making it a higher low, and now it's just finished creating a new higher high, and now it is creating a lower high at the moment, but it's not yet completed. It's still in the process of its creation. So technically, the weekly time frame is in an uptrend, but the details that I want us to look at that enable us to take advantage of it, and when it is in a corrective phase, while it is technically in an uptrend, but you could also take advantage of it and take sales as it is dropping to make lows. So when we look into the details, you'll see that price formed a high right here, which it broke out of impulsively, but price, on coming back to retest it, was able to break below it. Now, this area here wasn't able to contain price to the upside. This is a support area that was supposed to reject price to the upside, but it wasn't able to hold it to the upside, and price was able to break through to the downside. So for the short term, price for the weekly time frame is technically bearish. The other thing that you shouldn't miss is when you look at this high right here, you stretch it to the left, you can see that price has been able to break below it with this candle and was able to close below it. Now, why that is very important to us when it comes to taking sales in this for this matter, in this case, is that the fact that it has been able to close below it, we have a potential of price forming what we know as a head and shoulders pattern. And so technically, for the short term, price for the weekly time frame is bearish. The other thing not to miss as well is that price, when it closed bearish with this candle here, testing these lows here, it left behind this long wick to the downside, which is a wick that is likely to act as a magnet for price to come and fill it before we can probably see price move back to the upside, since from the general perspective, from the higher time frame perspective, which is from the monthly time frame, it is bullish. But for now, we seek to take advantage of price as it is coming to fill this wick to the downside. Looks like a small area, a small range, but when this is a weekly time frame, these are several days but put together into just 1 week. But when we drop down to the lower time frames, you realize you can actually take big scalps here and there as price is dropping to the downside. Now, looking at the daily time frame, we can see that the last move that price made was this impulsive move to the downside, followed by a correction and now we are on the next impulsive leg to the downside to complete what we know as the impulse correction, impulsive move to the downside. Now the other thing I want you to notice here on this daily time frame is that price, when it moved to the downside, it hesitated around this area with a bullish candle forming in between before this break to the downside, breaking below the minor support area that was formed here. So if I mark it out right from the left side, you can see that this was a strong area of support, but price was able to break through it to the downside, and now we saw it retrace with this green candle followed by this bearish candle that closed as a pin bar. This pin bar, you can see it's actually rejecting the low of the week of this bearish candle that was formed before the hesitation here. And so remember, the support area is not necessarily a point, it is a zone. And if you're to take into consideration the wicks of the candles that formed the support area, you can actually see that price with this candle here is testing and rejecting this resistance area. And so with that rejection, which had a strong rejection wick to the upside and a bearish close to the downside, it's an indication to us that the bears are now coming into the market. The small retracement that happened during this move to the upside has ended, and now we are seeing price drop to the downside. Now, if you want the trades from the daily time frame, this is actually an opportunity to take your trade right here at the break of the low with a stop loss at the high of the pin bar, and you could target, if we use our Fibonacci retracement tool, you could target this minus 27 extension right here, and that will be, if I could remove this, slightly above 2 risk reward. That's slightly above 2 to 1 risk reward. I've actually been entered into this trade, and right now I am looking to ride this wave to the downside to potentially come and retest these lows down here. I'm entered into this trade, riding this wave to the downside. As you can see, this is my entry with a stop loss above the high, and the target is down here for slightly, just a little above 2 to 1 when you look at it from right here. So that means for every dollar you're risking, you're targeting $2. Let's wait and see how this will play out. But if you would like to also take it from the lower time frames, especially let's say if you want to swing trade this, then you could drop to the 4-hour time frame. Let's drop there and see. Now on the 4-hour, we see that price is dropping below this support area. We'll look to see what action can be taken for a swing trade in the 4-hour. Now we could also drop down lower to the 1 hour for day trades, and the 30 minutes and 15 minutes for quick scalps, which I intend to probably do as well. So I'm going to wait and see how price closes below this support area, and I see if I could also find more kind of price action setups within this area here that I could take advantage of to add to the already existing position, this position that is actually running in the daily time frame, which I've showed you on my live account right here that is still running, to see if I can add to it and ride this wave to the downside, maximizing the gains that I could make on this currency pair, which is the Canadian dollar, Japanese yen. Thank you for watching. If you're new to the channel, kindly subscribe, like and share the video, and keep it on this channel as I intend to bring you more educational content. And so you could click that bell icon so you're alerted every time I post new content, so you can take advantage of it at the earliest. I'll see you again.